Hi guys, it's Birb here. Welcome to today's webinar, to today's Friday webinar. As we usually do, we recently did a couple of times, have them on Thursday, but we are back at the regular kind of like session Fridays. Welcome to today's Friday webinar, everybody. Everybody must be asking the question right now in their minds, in their heads, whether or not this is bull market still or this bear market has already started as Bitcoin dips at around $40,000 floor. And I'm going to actually commit some time to discuss the most probable and likely cases of Bitcoin's analysis, charts, my thoughts, and expectations for what's coming next. If you guys are ready to give it a try, to give it a check for what Bitcoin has in store for us for the next days, make sure you stay ready because we're going there right in a second. This video is sponsored by ZEN.com. They offer a comprehensive suite of banking digital products with benefits like virtual and physical card for your shopping needs with unique benefits, for example, cashbacks, extended warranty, and more. And use the Birb Nest code in the video description and get 120 days free subscription for personal account and 60 days free subscription for your business account. Give it a try, give it a go. That's what I personally use. And everybody, moving to the merit, we're going to discuss and actually lean towards analyzing, whether or not or what conditions need to be met in order to, say that this is a proper bear market or a bull market still. Let's give it a go. Let's try, everybody. To start with, this is a long-term chart overlaid with long-term Bitcoin chart, weekly chart overlaid with the dollar chart on right beneath in the black curve. And what we can kind of like, just notice is, of course, the negative correlation, most of the time negative correlation between dollar and Bitcoin, which means that it kind of like behaves as gold, right? Bitcoin tends to behave in a similar way to what gold does, because gold is basically negatively correlated to dollar. Whenever the dollar bottoms, the gold rallies. Whenever the dollar increases, the gold drops. Similar thing happens for Bitcoin, right? If you have a look, then basically anytime that dollar bottomed, Bitcoin peaked, right? There was a proper decline of the bear market as the dollar was increasing. There was a significant peak, at least for the short term, with Bitcoin whenever it kind of like went through the depression phase, and it bottomed out in the same day that dollar kind of like flipped locally for the local downward trend. It wasn't necessarily the most, I should say, outstanding kind of like peak or moment on the dollar chart, but still, it has shown so far throughout the history, that there are some bottoms and peaks and trends kind of like, developing in tandem, right? The market cover crash, of course, dollar peak, Bitcoin bottomed, another double bottom, let's say, technical case for dollar bottom here was actually Bitcoin bottoming, and ever since dollar has actually been, ever since May 2021, the dollar has been rallying, right, with not really much of stop per se. And Bitcoin, if you have a look properly, then Bitcoin for the entire 2021 has been going in sideways, right? We've been seeing nothing but a proper sideways move for almost the entire year. I just want to make sure, guys, that you can see my screen. I think it's okay. But the most important point is, again, that this sideways movement, I wouldn't use the word trend, because trend doesn't really apply and come along well with the sideways movements. Sideways movements are actual, antonyms of trends. Trends are directional movements. We have a strongly defined direction, and they kind of like the chaos, while the sideways movements, the range bounds, the trading ranges, rectangles, no matter how called that, they by definition lack the direction. They are full of chaos on the major, on the lower, on the medium time frames, right? So here 2021 was the year of sideways. Year of sideways in the long-term upwards trend, which had lasted ever since COVID crashed 2020 in March. And what does that mean? what does that mean basically, right? Can we call this sort of like a movement that's been going on for Bitcoin, can we call that a bear market? Well, the difference between this, right, the difference between this and the proper bear market of 2018 is the declining tendency, right? The bear market, by definition, is a downwards long-term primary trend, right? Which is, by definition, again, technical analysis would say that it is a sequence of lower highs and lower lows, right? Are we really seeing lower highs and lower lows here in 2018 case? Well, we had the high, we had the local low, we had the lower high, we had the local or even lower low here, lower high, lower low, lower high, etc. So it's clear that we saw the downtrend in there. Are we seeing a proper downtrend this time, right? To name it a proper bear market? Well, not really, right? Because we saw the high, we saw the low, we saw the sequence of higher highs and high lows. We actually made a new high, right? We actually made a higher high, which is by no means relevant, calling a bear market. Bear market doesn't give you higher highs, right? The worst case is that we are trapped inside this range, inside this wild, monstrous $40,000 sized box, right? This is pretty insane, but imagine, guys, that this entire box of 2021 ranges between 28.8 floor of June, July bottom. This comes all the way up to $69,000 for the move that it developed. And this basically means that there's $40,000 of the range size, right? And potential $30,000 in the market direction, whenever it breaks out from the technical point of view, right? Whichever way it breaks down or breaks out upwards and downwards, to the upside, to the downside, the technical target potentially reaches $40,000 measured from the breakout level. Okay, in the direction of the breakout. So in case of a breakout level being to the upside case, which I do believe it's going to happen eventually this year, sooner than later. I still do not believe this is bear market. Then potentially it could get you $70,000, let's say approximately, added with $40,000, or more approximately 60 plus 40 equals somewhere between $100,000. So pure technical target of an upwards breakout out of this long-term sideways movement, is basically somewhere around $100,000. Well, in case we see a proper breakdown, then the proper technical analysis target equals 28.8 minus $40,000, which basically gets you somewhere at minus $12,000, which I'm not sure is a relevant target, right? So another reason why I do kind of like, not necessarily believe that we're in the bear market. Because it wouldn't make too much sense. But here, again, this is our actual major concern and major problem, that we have been lacking direction ever since we kicked off 2021. This sucks. This sucks, to be honest, because how much easier would it be, everybody, to actually align with the main narrative, with the main trend, right? It was far easier, in my opinion, while I'm a happy survivor, not only a survivor, but I managed to actually, funnily enough, cash out quite successfully back in 2018 around the peaks. I had pretty good successes in there. This is something that, by the way, that is you can check that at any time publicly on Twitter, or just move back, scroll back to the entire history of our Discord community from 2018, because this is basically the 5th year that we've started as the Birb Nest since the foundation, right? It's pretty wild. And I've been through the bull markets, I've been through the bear markets, I've been through the sideways, and I tell you that sideways is the worst trade, personally, to me, right? You're going to see probably many traders say that this is the best period for them, but what I personally believe is that, well, we are looking at probably the worst kind of like, solution, the worst solution that you can get out of the markets, right? Because you cannot position yourself effectively. The market keeps, the market is not consequent in reaching new highs or reaching new lows. It keeps swinging back and forth, with this problem that this back and forth means $40,000 in size. This is a very wide chop, which is very hard to trade, right? The fact that we, at least some of us, managed to get quite good results with getting the bottoms calls, or people were laughing at me for cashing out in my cars and and watches and everything whenever the peak day was literally on the peak event, $65,000. I was being laughed at for it. So despite all that, I do believe that in my entire trading career, the biggest chop I have ever witnessed was actually throughout 2021. And for most of the time, like literally for most of the time, the market was sideways. The market was sideways here from February till March, till May. Then it literally trended down for like I don't know, couple of weeks. Then it entered another sideways phase. Okay, another sideways phase that lasted for about 3 months. Then we started rallying for a trend. Then we entered another sideways, okay, that lasted another month or so. And then we declined locally, gave another month of sideways as we kind of like, just were entering 2022, right? So this is one large sideways that keeps lasting, with majority of the sideways kind of like committing to the overall time scope. So the main narrative has been lack of direction, lack of consistency, lack of consequent movements, and very hard conditions to position yourself, because by the main time frame, by the main time scope, Bitcoin has been lacking the trend for more than a year so far. It is quite a difficult case, right, from the for any trader. Most of the traders, to be fair, do not even care to trade sideways ranges at all, because they do not believe, they are not trend followers, right? So trend followers, if you're the trend follower, you have had a pretty fucking hard thing, to do and to achieve for the profitability throughout the past year or so. So it's pretty crazy, right? But regardless of that, right? I'm showing you the weekly chart because it gives you the answer for whether or not we are in the bear market. So the answer is we are not in the bear market from the technical point of view. For this one simple case, we have not seen a lower low. So this is not even a downward trend. This is this one major big sideways. This is not a downward trend. Bear market does not equal sideways. Bear market equals downward trend. And downward trend needs a sequence of lower highs and lower lows, right? So we had the low. We would have to breach and close a month or week, like in an ugly manner beneath that low. That could potentially, that could actually be the technical confirmation for the bear market starting, right? Until that happens, everybody, I do not believe we're in the bear market. What CME futures chart says. First of all, this is futures chart, right? So you have well, the pretty rough idea of the direction of the price for analyzing, with analyzing the 200-day average. This is daily chart, CME Chicago Mercantile Exchange daily chart with 200-day average applied, which shows you the trend, the long-term trend, right? The long-term trend, everybody. This is showing you locally that the market has lost its upwards momentum on average, accounting the past previous 200 days, right? The fact that we are trading below and kind of like extending beneath is, well, it's not really good for bulls, of course, right? Again, the same range, like the same range literally that's lasted for more than a year so far, right? With the low swept in here, high swept in here, with the perfect Evergrande news timing, to the single day, hour, and minute, with the Bitcoin peak, right? This potentially, gets some sort of support out of the technical analysis to be expected within this area, right? So the previous lows could be expected to be, well, respected to some extent, at least this time too. Which is why I wouldn't necessarily be, well, the first person to short this thing, right? The most likely situation is because we used to have this gap, which later got kind of like filled. We are still missing the filling for this breakaway gap, which eventually most of the gaps tend to get filled. You have three types of gaps. You have after the downwards trend reversal that we had in here. You usually have some bottoming formation, which breaks away usually after the market open throughout the weekend. Now, after the weekend, this is called a breakaway gap, right? So this is a pretty clear case of a breakaway gap. And then we usually have somewhere midway through the trend, some sort of this kind. We have something that we call a measuring gap, right? Measuring gap. That is basically telling you that this trend is within the extension, within the position of 50% of the entire length of the trend. This is measuring gap, right? And then on top, you usually would have the exhaustion gap, right? The exhaustion gap, which was potentially in here. We can assign put the exhaustion gap in here because it usually gets filled very fast after a massive upwards trend, right? After the trend reaches its maturity, after some periods of distribution, there is a local breakaway on the local time frame, and this breakaway is kind of like filled almost immediately. So this makes it everybody an exhaustion gap, right? The sooner, like, you have to wait short term. It's very logical in a sense to get the gap filled in here because it's very fresh one, right? You need to wait in the short term. You need to wait days or weeks to get the proper filling for the measuring gap, for the halfway gaps. You have to have basically a medium-term correction that lasts weeks to months, right? So as the move expands, it of course needs more time to develop downwards, right? And well, per analogy, to fill and to confirm to fill, kind of like close the window or to fill in the gap on the breakaway side, you need a high time frame retracement, right? So what I could see potentially here, in case we fail and close in a very ugly manner because there is some external, I don't know, like a global volcanoes eruption or another 55th COVID variant coming in literally to strike the markets globally, and other FOMC meetings, with the Fed announcing their high rate hikes and so on. If it all aligns with Evergrande collapse all of a sudden, or whatever other unpredicted stuff that may disturb global markets, then I could see this failing, down to these levels. All right. But even filling this gap, although many people would likely be waiting for that, doesn't mean it's going to step into the bear market, right? For the reasons that I mentioned, we need a proper close through beneath that previous lows, or we have to confirm a downwards trend at least, right? Although it would still not be as clear because we would still be missing the lower high, right? Because here we made a higher high instead of lower high. So we made a higher high, so we would still need to search for lower highs somewhere, right? So one way or another, we are for long term missing the direction. We are lacking the momentum. We're missing the direction. Okay, and it means that it can swing back and forth within the box, for as long as it takes to unfold in a specific direction with a breakout or breakdown, right? It can stay. It's very unnatural, I should say, for Bitcoin to stay for this long, but with the external FAT coming up, like that, with the COVID variants coming up daily, disrupting the global markets, equities, dropping. I read somewhere, I think I posted it in the discussion in the Birb Nest community, but there was a post basically that this must be one of the highest cases, one of the most significant cases for the stocks where stocks were basically seeing the biggest amount of stocks in decline, either in history or somewhere around that. This is pretty strange, right? So yeah, here eventually there is a thing called mean reversion, right? So whatever happens in here, perhaps again this level acts as some sort of like a magnet. We see some bottoming process, at least for local price action, because at one point we need to revert back to the mean because of how the markets move. in the oscillations, right? So the mean reversion will tell you that eventually the market should be back at around $48,000, no matter what happens, right? Regardless if it goes down even more or just rallies back immediately. You never know that, especially with so much of the unpredicted FUD coming up from external factors. But here again, the daily chart. This is actually the mid-daily chart, but the daily chart with the Bollinger Bands, right? Of course, printed this sort of like an ugly breakdown signal for the candle closing closing through the lower band, for the lower volatility band. This is something that definitely is not really a good case to have for bulls, right? So again, local supports can be identified and at the previous demand area. So by the candlestick price action alone, no indicators applied, not even disregarding the Bollinger Bands, you would have the price action support to look at within this area, right? So usually you want to buy the support and then sell the resistance, right? So sell the resistance accordingly would be potentially in here if you were a level to level trader. These are the levels defined by the range, right? And if we were to give it a proper case and proper check, just want to give it a yeah, okay, it's recording so far still. This is a BPRO applied, new BPRO applied with the levels. If we want to see automated levels, or actually before we go there, we have to understand that we've been under the impact of the same corrective move that started off in mid-November, right? The mid-November kind of like flashed the signal of the bearish breakdown with the breakdown of $62,000, and it has remained in the bearish control, in the bearish impact ever since, right? Bearish impact, because it doesn't necessarily mean the bearish trend per se, because here we were kind of like just trading for a month in the sideways, but this makes a significant. This gives you significant information as in the bearish control, right? So it clearly tells you that the stop for this current time frame trailer indicator, which is probably the strongest level for the invalidations of the prior lasting trends. This tells you that bears lose officially control over the market with the proper breakout with at least mid-daily, but mid-daily, daily, or month or weekly close through the 46,299. Well, to be safe, people usually pay a lot of attention to round numbers. So to be safe, I would suggest 46,300. 46,300. You need to see a close and candle breaching and closing through the area. The higher it closes above it, the better, of course, for bulls. But until that happens, the bears are in control ever since the mid-November. Okay, so it's been quite some time. In order to get you some potential levels, right, we can actually go for the automated level lines for the BPRO that come from the pivotal points. Okay, they're given some sort of like automatically. And here 4774 is the support that you can locally observe as well to expect some sort of like a bullish price action, at least on a short-term basis, right? At least on a short-term basis. If we switch to the daily chart to see some higher time frame levels, right, then you see another level line which is clearly given at 38,459. This basically means that in case we lose, this local support as well, and as people would lean, of course, the more bearish event after that, this could potentially mean, right, that the next stop is at 38,459. Can this happen? Well, we are pretty near, and all it takes is just one bearish news, which is pretty, constantly flowing in from outside of the markets, from the equity markets and whatnot. So yeah, you need to be ready in case it taps 38,000. Did I expect before such a strong deep correction? Well, yes and no. I mean, I'm a bit surprised that it keeps kind of like coming with external FUD. If you ask me if I had expected to see almost on a daily basis, with the new COVID variants like Delta, Omicron, or there's this new that I don't even know how it's called, spotted in France or somewhere, like whatever you name that, it's completely irrelevant, right? Then the answer is not, of course, right? I'm not really an epidemiologist for that. But here again, what often happens is if you want to get large money put in, of course, on a very decent discount that Bitcoin has been into for at least almost 2 months already, then usually you want to sweep the lows, right? So we would wait for the daily close to see if it manages to close back above the broken support. In case it fails, then the next support is probably the area of the previous lows. Just like I said, like high 39,000 all the way down to 38.5. Okay, so this might be the level that I would be looking at. So the most important case for now locally, right, is by the technical analysis. Let's just give it a check. By the technical analysis, let the beeper load for a second. Okay, then, well, the bears are in control. Local intraday bears are in control until the proper close through 42,871. Well, how does that actually, refer to, to the fact that we're not in the bear market? Is 40% retracement something natural in Bitcoin's history? We had seen these before. We had seen this in 2017, 2015, 2017 rally. We had seen multiple of 40% retracements. We still managed to kind of like go through, and I'm not going to call personally the bear market until we clearly break the floor of 28.8. So anything until 28.8 is breached and closed through is basically this consequence of this lack of momentum, this lack of this enhanced chaos, high entropy, if you will, for the markets within the sideways of 2021 between 28.8 and $69,000, right? Even if we have a look, of course, at the sentiment, like if we go for the fear and greed index, and historically, it was always worth buying. It was always worth buying the negativity, extremely bearish sentiment, which we are seeing right now. Extreme fear yesterday, extreme fear today. 18 points on the scale out of the 100, which is typically a very rare occurrence. If you have a look at the main chart, and then it displays you how bearish the sentiment has been. And this is the longest we've been in the extreme fear ever since the bottoming process in July. And June to August, right? So historically speaking, anytime Bitcoin has visited the extreme lows, the extremely fearful sentiment, and of course, extremely pessimistic people, was followed by a bounce, right? Almost immediately after. At times, it takes time to develop. It is not a timing indicator. The fear and greed index is something that I use to, derive with the conclusion of whether the Bitcoin is cheap or expensive. And it's as simple as knowing that in the upper part of the chart, the Bitcoin is expensive, right, per the price and per the sentiment. And when it's in the lower part, especially beneath 20, when this is extreme fear below 25, but specifically below 20, and then it literally gives you the indication that Bitcoin price is very, very cheap, right? The lower it goes, the cheaper it goes, and the better buying opportunity becomes, mainly because of the fact that the crowds are usually wrong at the extremes. The crowds are usually right in the middle of trends, but they are usually wrong at the extremes. So long story short, it's not going to give you the bottom. You're not going to find or buy the bottom, because why would you? What are the chances of buying the bottom or selling the top, right? They are very low, lower than winning a lottery ticket. But for this, like if I were to kind of like give and throw any expectations, then I say consolidation or potential tap, like one last liquidity hunt somewhere into the 38 and $40,000 lows, perhaps. In case current lows are broken, of course, everything is conditional. If something happens, then something else happens. In the technical analysis, this is how it works. So here, just to wrap up, because I definitely need to be, need to be cutting this session. For Ethereum, I definitely do not like the fact that we breached through the previous level that I was warning about. That if we lose it, then this is going to be kind of like ugly. The week is still not closed. I've seen many things in my life, for crypto. So we should wait for the weekly close in here to decide. This is a weekly chart. But it basically tells you that the proper bearish correction, is sort of like starting, okay, or is at least confirmed on the weekly time frame. We definitely, could, well, as the bulls, will want to see the bounce here on the Ethereum versus BTC chart, as it's retesting the symmetrical triangle pattern. In case if it fails, there is a chance it actually keeps getting lower, potentially even back below $3,000, mid 2000s. This would be pretty ugly case. And for Litecoin, many people ask me about Litecoin. Of course, I think this is very natural. We have seen something that, well, is moderately local, a bearish case, but again, we have not seen the candle close yet, so we still have more than 2 days to fix it, or to at least make a decision, because that is after the weekly close is what I'm going to make a decision about, potentially closing at least some parts of my positions late, but protecting myself against of a further downside declines here, in case we see a proper and ugly close through, okay, the AVO up, 3-year long AVO up. In case we see the strong close beneath, then I could see something like that happening, right? Like down beneath $100. This wouldn't be really a good case, of course. But yeah, so similarly for Bitcoin, this could be a bearish case in case we lose the levels that had been so far kind of like recovered. You saw the taps on the weekly candles into the AVO up levels, and they recovered, bounce back, right? So in case we fail to see the bounce back, in case we see the proper close through this level, then I'm going to actually reconsider my at least part of my positions, both for Ethereum, for Litecoin. Definitely not going to exit all of these, right? Because it's a little bit too late for it, for me personally. But this is my trading strategy. I trade mainly longer time frames. Everybody, this has been a pleasure to get you this quick update today. A bit shorter session because we are simply waiting for what market does around the lows in here. I think I gave you the proper understanding for what the sideways of 2021 means, what levels to look at for invalidation of the bearish correction, for the local lows, on when to bid yourself if you wanted. And the sentiment shows extreme fear. Historically speaking, I think there hasn't been a case just yet that when somebody buys into extreme fear after heavy retracements, after usually 30-40% retracements, that they were unprofitable soon after. So I would expect no different. I would expect some profitability to kick in after the extreme fear is sort of like tackled. So extreme fear is usually way better buying opportunity than it is full selling. But for us, that this has been part of 2021 sideways between 28.8 and $69,000 of $40,000 size. It's very hard to position yourselves there. It is what it is. We cannot change the markets. I hope you guys appreciate this update. If you enjoyed this webinar, make sure you actually hit the subscribe button, smash the likes, hit the notifications on as well, because there are many content pieces coming out on our YouTube channel, on the Birbness official YouTube channel. Make sure, guys, you stay safe, stay tuned for the next updates. We are going to give you guys on our Discord in the Birbness community, and also outside on Twitter. If you guys will stay safe. God bless you all and trade safe. Cheers.